Good day. Thank you for joining me. I'm Ryan Kun. I'm going to be taking you through Mondi's full year 2018 results. Mondi has shown a robust operating performance and strong cost control. This has been driven by increased volumes and higher prices, while the company has leveraged key industry trends and continued to capitalize on e-commerce packaging. Although macroeconomic uncertainties remain due to Brexit and the stability of the Eurozone, the group is focused on delivering accretive growth through its strong brand and good structural drivers through capital investments, including the modernization and startup of its kraft paper facility in the Czech Republic. Mondi is a high-quality company with an impressive track record and boasts sustainable and high ROEs, stable operating margins, as well as strong and consistent cash generation. Earnings are cyclical and highly sensitive to foreign exchange movements, prices, and input costs. However, the group mitigates these risks through its low-geared balance sheet, global presence, and some product diversification. ROE is positive and above the long-term average, and additional shareholder wealth is being created as evidenced by the ROIC over WACC ratio of 1.61 times. Trading on a forward PE of 10.5 times, we feel the share offers value. In addition, the share offers a solid dividend yield of 4.1%, with the focus to prioritize ordinary dividend growth within the context of the dividend cover policy. We therefore recommend an overweight position relative to the JSE Capped Index. Looking at a few financial highlights. Revenue increased by 5%. This increase was due to higher selling prices across all businesses. Volume in the fiber packaging business was up. This was driven by completed capital investment projects, operational improvements, and strong organic growth in industrial bags. Consumer packaging volumes were impacted by exit lower margin businesses and the decline in volumes of personal care products. In the uncoated fine paper business, volumes were up year on year, while market pulp and newsprint volumes were negatively impacted by the extended shutdown of the Richards Bay mill. Adjusted operating profits increased by 20%, with operating margins increasing by 18 bips to 14.8%. Higher selling prices, strong operational performance, and benefits from cost-cutting initiatives more than offset higher variable and fixed costs. Wood cost inflation was seen in Northern and Central European markets, while energy and chemical costs were up due to higher crude and gas prices. General labor cost inflation was seen and higher maintenance costs occurred at a number of the pulp and paper mills. The group was able to limit these increases in fixed costs due to cost management and productivity improvement initiatives. Headline earnings per share increased by 27% to 184 cents per share, while the group declared a dividend of 79 cents per share, up 27% from the prior period. Onto the cash flow. Cash flow from operations increased by 16%, which was driven by the rise in operating profits. CapEx grew by 16% due to major capital projects, including planned shutdown maintenance. Working capital decreased by 4%, in line with management's expectations. This resulted in free cash flow increasing by 16%. Mondi is cash generative, excluding the payment of special dividends declared in the prior period. The group is in a position to sustain dividend payments in the future. Looking at the balance sheet. Net debt increased by 44% due to the group issuing Eurobonds during the period. Net debt to EBITDA is 1.28 times, below the long-term average and industry average of 1.6 times, indicating balance sheet risk is low. Having a look at prospects. Management expects mixed pricing throughout 2019, with price reductions in container boards and market pulp, with strong pricing in the kraft paper market. There are plans for longer maintenance projects related to shutdowns, while recently completed capital projects and acquisitions are expected to aid margin expansion. Capital investment projects are expected to increase and paper production by 10% when fully operational. In 2019, CapEx is expected to range between 700 to 800 million euros. The estimated impact of planned shutdowns is expected to be approximately 150 million euros, while working capital as a percentage of turnover is expected to range between 12 and 14%. If you would like to place a trade, please speak to your financial advisor or contact the trading desk. A comprehensive company analysis report on Mondi can be found on PSG Wealth's online trading platform. Before we end off, please take note of the following disclaimer. Thank you.